warriors. Let's have a great day. I'm going to have Lydia Pinkley to be our guest today at the top of the hour. Lydia is going to give us her call as to whether what's happening in cable is a correction or that we're reversing back to the longer term downtrend. How's everyone doing today? Give me a Y if you feel great. Anyone feel great this morning? Well, speaking of great, the S&Ps was a great call on Friday. So Friday, before Blake was signing off, he asked me if I thought what he said, if I had any comments, and I just added that through my intelligence gathering, someone that I respect was looking for 2590 on the S&Ps. We hadn't even broken down on this low, and even if you missed that, you had another chance yesterday at the same levels. And then after I talked about it going to 2585, 2590, Stelios came out and said Greg had just put out a pip on the same thing, looking for the same levels. So when a couple of my favorite sources are saying the same thing, here's Greg's call. And Greg is someone I don't like to fade. Plus what I got from my buddy, he had the same entry, okay, and the same target, and we're almost there. So I have a little bit of an inside day working. I know a lot of people are looking for a washout, take out these lows. My source is saying that we're going to hold these lows, and then is looking for a big up move after that. So I'm going to be stalking this for long positions in certain equities right around the 25.90, 85 level. Everyone with me? Give me a Y. Bob Brewer feels real good. Okay, Bob, no drinking during trading hours. I want to go to the euro. Blake nailed the potential for the euro to bounce to the level it got to. He said about 22.5, and we got to clean it up, Blake. We only got to 44, and I showed this 1 hour 1, 2, 3. Okay, diverged here. I think we were here yesterday morning, and said it's going to be a low, not the low, and the reason was a 4 hour. Okay, we're diverging a little bit down here on the dollar on the 4 hour now, but still don't like the reading. Okay, and also I just wanted to quickly touch on the Dixie, which is mainly the euro. That Jim Welsh, you know, he's been short the euro through some type of ETF, and I've had Jim on a few times. He's very good. He actually thinks that the Dixie has a chance to rally towards 94, 94.5. We're looking for 92. All right. So Jim, what Jim says, he's a great technician and an excellent fundamentalist. He really knows the Fed and everything, and he's looking for 94 in the dollar. That would equate to about 116 euro. I think that's his target. He was prepared, like a lot of us, looking for one more high in the euro. Just never happened. And it's looking less likely now since we had this pretty good breakdown here. I have a line coming in. I'm sure it's going to make some stands around the 21 to 120.5 level. And I'd like to go to the metals because I think there's a longer term special situation coming up. You guys know I've been looking for a washout in gold. Thought I might have missed it after that spike in silver last week, but still looking for them to wash out the 1300 bulls. I have a 61.8 level here at 1286, but I'm thinking about the geopolitical backdrop right here, and you know, it could end up being deeper than that, and looking for a minimum of at least 1570 in silver. I think silver, you know, the fact that it did not clear out the Feb high still puts the washout on the table. But on the geo front, I'm thinking that perhaps the metals head down into the summit between the U.S. and North Korea, and that they come up with some type of deal. I'm not saying it's going to be, you know, earth-changing or earth-shattering, but I'd like to buy peace in the precious metals. So I think we're going to be well under 16 in silver and at least 1290 to shake out 1300 bulls in the gold market. Everyone with me? Okay, DB is saying that we're going to crack the 2590 level. You might be right, but it still is a great trade from last week. Wouldn't you agree? Whether it does or not. Okay, so you know Bernard Baruch said, Joe, DB no bull. You never go broke taking profits. Also, very gutsy call by Blake yesterday in the end. And I want to ask Blake in a little bit about the yen, because forget about today's action, but it took a 40 handle break for the yen to still be higher on the day. So, you know, this 109, 110 level, some people have, I think Andre was on yesterday, he has a secondary target up around 1060. That's where my return line would come in sometime next week. So we'll see. Is this really, maybe it's, if the dollar is going to Welsh's objectives, the yen's going to have more than 110 in it. So we'll see. What I can say about the yen now that I couldn't say yesterday is at least at new highs up here. See this? This is why I couldn't short it. It was a great price level. But, you know, sometimes if you're disciplined, you're going to miss trades if you're disciplined. And now we have a non-confirmation in the end. So, you know, we could be getting to later stages of this and a more serious correction coming because we're not getting a confirmation in that. And then I also want to wrap it with Aussie Kiwi yesterday I talked about. I still think there's going to be a correction in it. It's made a new marginal high. I think last night by half a pip or so, and it could, you know, probe it a little bit. I'm not looking for an explosion here, but if you want to be conservative, you have now confluence at the 70 level. So if you get candle closes back under 106.70, which isn't that far away, that would be kind of a false breakout of this level here, and I think it's set up for the correction at least. I'm thinking at least halfway back, shake out the 106 bulls, maybe even 61.8 at 105.70. Anyway, I'm not chasing it up here. It could go without me. And I think that we're starting to lose momentum. This looks like a fractal, this thing here. So everyone's saying, yeah, we have another rectangle. People tried for a breakout last night, didn't get it. So we'll see how that unfolds. And now I'm going to turn it over to Blake, and I'm interested. I know Blake has one of the best feels for market action. And you know what I admire about Blake is he may have a view, but you know, if there's evidence, like he pointed out, the dollar was breaking that downtrend, okay? And even though he, you know, in his head, he's a dollar bear, he talked about the implications of it, and he has no problem at all reversing course. So he classically, even though he doesn't have it written down like I do, has the ability to follow what W.D. Gann said, that if you don't learn how to change your mind, you won't have any change left. So, Blake, I'm wondering what your reaction is that it took such a big S&P break yesterday just to take the yen a shade lower yesterday.
Well, first of all, I ended up overall losing in the dollar yen. I took it short. I closed some of it down at the 108.70 level yesterday when it came off, and then I stayed in the rest. And I actually just manually got myself out of that trade this morning. And because with yields as strong as they are, it's really difficult as yields are breaking higher to you know, sit here and go, oh, all right, the dollar is going to continue to be bearish. I mean, here's the dollar yen, and I played this, you know, I played it short for a couple of days, and then I took a lot of it off yesterday when we were down here, and then but as you can see, we rallied right back to highs, and I'm like, you know, I've got to take it off the table, because with yields just, and this is what the yield market looks like. This is what the 10-year yield looks like. Let me get over to it real quick.
Yeah. Well, you know, congrats on not being stubborn, bro. I mean, the biggest mistakes traders make, and I've made it, is being stubborn and, you know, not getting out of the way when price action is telling you something else.
Yeah.
And, you know, it's really, I think it's the biggest problem I teach, and it's the biggest problem for most traders, is to admit they're wrong and get out of the way.
The thing is, the thing I know is, and the thing that probably irritates me the most, is I know that the dollar is breaking higher. So, you know, the dollar is, you know, the dollar is breaking out. It's like, why stand in the way? Now, the key question here is, will the euro break down ahead of the ECB meeting? And when I say break down, we'd have to break this 121.50 level. I mean, the amount of stops that are accumulating down here probably are pretty substantial.
There's at least one there, Blake.
At least, yeah. And you know, the question is, do we come back down here and test 2080, which is, you know, 100 pips away from where we're at? Do we test that ahead of the ECB meeting? And that's the real question right now. I think that most people are asking. It's like, okay, you know, with the rise in yields, with the dollar as strong as it is, do people get freaked out ahead of the ECB meeting or not? You know, enough to push us down towards the, well, let's just call it 121 level. And you know, obviously, you know, if you're bullish the euro right now, it's you know, you have to be very, very careful. I mean, we've got the euro dollar that's trying to break lower, and obviously we rejected some pretty key resistance at 122.50. You know, overnight we rejected this 122.50, well, which is way up here, and we're pushing, you know, new trend lows, and we're just kind of bouncing around at this point. But you know, like I said, I think as traders, you got to be, you know, a little careful here. And the thing is if the euro does break down, what else is going to happen? I mean, you've got the pound dollar that is that's extremely, you know, weak as well. You've got the Swedish krona that you know, is also breaking higher. Look at the U.S. dollar Swedish krona. Well, it's, you know, it's coming off right now, but it is, you know. And I think that the market is, you know, at a very, very precarious, you know, level. And I think you have to be really, you know, really careful with it. You have to be really careful with pretty much everything that you're doing here. I mean, the euro dollar, I think the euro dollar is a short, but you got to, you know, do you sell it here or do you sell it, you know, 122 at a little bit better price, you know, if you can get it a little bit later today. You know, those are I think the risks right now, you know. So but I mean, look at the dollar index. The dollar index, you know, this is a 5-minute chart. I should put it on a 4-hour chart. You know, dollar index is getting pretty bullish here. So you gotta wait for these dips and allow to be, you know, allowed to pick up some dollars on dips. And I think that's the way we have to approach it today. So, but this dollar yen, and we were talking a little bit about the yen. I mean, we're at the 78% retracement right here, just knocking our head up against it. The dollar yen, in all actuality, you know, looks like we're probably going to. I mean, this is one of those situations where if you get a false breakdown, you know, which we've had, and it actually ends up turning higher. I mean, the dollar yen could really scream. I mean, this thing could, you know, really scream higher, especially if we get back above the 200-day moving average at the 110 level. And like I said, with yields moving higher, That's kind of the risk right now, right? You know, it's the risk is we could really be, you know, plowing higher in the dollar yen. And I tried to be, I played it the way that I wanted to play it, you know, being short the dollar yen where I wanted to be, because this is like the, you know, it's a retest of the broken triangle here. But the fact that it didn't stop, you know, you have to respect it. And if it doesn't stop, that means that, you know, there's probably something bigger brewing that is in play now. You know what I mean? So.
Yeah,
Now,
well, like I was saying, you know, Jim's pretty good, and he's thinking that this dollar rally could stretch all the way to 94.50, and his target's like 116 or so in the euro. So
I think that's all very doable.
Yeah.
I think it's all very doable. You know, like I said, I think the question right now is, you know, how far does the dollar go ahead of this ECB meeting? I think that's the question at this point. And you know, I look at the Aussie, and by the way, this is a kind of a big deal. The Aussies at channel support. I sent out a tweet this morning, just make sure that everybody's a little careful here. But if you notice the Aussie, I mean, we're below. This is a year-long trend line, and we're below it. It is a weekly chart. We've broken pretty hard. So, you know, there are at this point in time, you know, there are some risks to the Aussie. You know, because if the euro breaks through 121.50, let's just, you know, go back over here really quick. We break through 121.50, it's going to usher in a lot of dollar strength, and that's going to come through everything. I mean, you have the Aussie.
Your 200 week on that, Blake, came in like around on the euro, came in I think around 115 down there, the blue one.
Yeah.
Okay.
Correct. I mean, but this is one of those situations that if you start to see really the dollar accelerate, because remember, the dollar is in squeeze mode right now. So if you start to see this dollar really accelerate, you know, what are the implications? I mean, the pound. Look at the pound's walking just such a fine line here. I mean, the pound is, you know, we start breaking through 139, and you know, the pound could very easily trade down to 137 without much of an issue at all. You know what I'm saying? You have the U.S. dollar Norwegian krona is above the 200-day moving average. I mean, look at this squeeze that's ensuing right now. All right.
Yeah.
And then look at the U.S. dollar Swedish krona. The U.S. dollar Swedish krona. I mean, this is a pretty severe breakout here. So. And look at the U.S. dollar Mexican peso. This one is just got a lot of people short here at 19, and then we cleared these highs today, and it just, you know, it's creaming higher. U.S. dollar Canadian as well. Look, we stopped at this neckline yesterday. Looked like it was going to pull back, and then, you know, we're at the 618. We clear 129 in the dollar Canadian. I mean, this thing's going to be, you know, going to be screaming higher. So I think that, you know, if you're short the dollar, and then, you know, again, I'm going to go back to the dollar yen just because I was short. This dollar yen starts clearing this, you know, 129.25. We can make a run for 110 or the 200-day moving average. So it's not just like, you know, the dollar, you know, could squeeze against one currency. The dollar looks like it could squeeze against a lot of different currencies, and hard too.
King dollar, the Larry Kudlow dollar rally.
Hey, it could be the Larry Kudlow dollar rally for all we know. You know, it really could be. I mean, he is definitely an advocate for King Dollar. So, but you know, I look around and it's in the dollar's in a scary spot. I mean, if you're short the dollar, it's in a scary spot. if you're short the dollar, remember the dollar is so poorly positioned. I know I've been harping on this for a long time. You know, it's such poor positioning that I don't think we've even seen the squeeze yet. You know, I don't think it's happened yet. I think it's happening, and that's why that that if the dollar really starts to take off, you know, it could get messy. You know, messy to a point where, you know, people start to really liquidate, you know, their dollar short positions at hardcore. So that's one thing that I just keep thinking about is, like, you know, how ugly could this move get, you know, for traders, you know, and institutions that just need to get out of positions. So, man, look at this U.S. dollar Swedish krona still tearing it up. And this is a serious breakout right here. I mean, this is, you know, 7 months dip and rip, V-shaped recovery, W formation. You know, look at this thing. I mean, this false breakdown over here in the U.S. dollar. I'm long a little bit, but this move could take us all the way to 9 without much of an issue. You know. Let me get rid of like these smaller fibs. Let's get rid of like this real quick. Yeah, I mean, you look at where we could extend to. I mean, you know, if the dollar Swedish krona takes off, and that's just, you know, that's just, what's that?
It measures up there.
Yeah, again, you know, you can see this false breakdown here, the false breakdown getting everybody short, you know, and then the momentum just, you know, could take us really high here. So again, I'm looking around at every dollar pair going, whew, man, if I was short the dollar, I would be very, very nervous at this point. You know, you gotta be. So anyway, and then, you know, I don't think we even took a look at the Kiwi. Look at the Kiwi just getting destroyed. I mean, absolutely just bulldozed here in the Kiwi dollar. So, you know, those are just things that I'm looking at. I mean, there's not much else to say other than if you're you know, if you're short the dollar, you just have to be really careful because it looks super bullish. Oh, you know what? We should probably take a look at the U.S. dollar Swiss franc. And look at that thing. You know, where's the Swissy going? I mean, the borrowing cost to be long Swiss francs is really expensive. So, you know, if you're sitting there, you know, short this thing, short the dollar Swiss or long Swiss francs, I mean, you're liquidating pretty aggressively here. And by the way, we are at, let me drop this down. Yeah, I mean, we start clearing, you know, the 78% retracement. I mean, we could trade back to parity pretty easily. I don't see, you know, why not? You know, why we couldn't do that. So, yeah. So anyway, the dollar looks like it could go gangbusters, and it's something that that I think everybody needs to be watching at this point and being very very careful with dollar shorts. And let's take a look at yields again here. Let's take a look at the bond market. Now, if the bond market, where's the ZN? So here's the 10-year. You know, the bond market, you know, we're at 19 right now, 119. You know, if we trade down to 118, 118.19, which is the 161% extension. Let's see, we're also, you know what? Let me go over to the weekly chart. That was the 38% retracement that was holding. No, the 50% retracement. The 618 comes in at 115 and change. I mean, God, if we go down there, then you know, let's just imagine, you know, bond market goes down there. That means that yields are going to complete and get to 340. I mean, if yields are at 340 on the 10-year, you know, where does that put the dollar across the board? So, You know, that's again, these are just things that I think about when I'm.
Yeah, maybe that's how we get 94, that the dollar goes up until yields peak on this election.
Right.
Possibility.
Yeah, I mean, it's extremely, you know, it's possible, and it is possible at this point. So again, I just I think being short the dollar is a little dangerous right now. And you know, are we going to see more position squaring ahead of the ECB meeting? You know, there a lot of bank analysts that I've been reading, you know, they're not expecting a super dovish you know, Mario Draghi either. So you know, if Draghi's slightly dovish, you know, where does that push the dollar? So anyway, again, you know, I think it's all a dollar story. So I guess one last thing I should talk about is, where does that put gold and the precious metals? You know, if the dollar does continue to rally, if the euro breaks through 121.50, gold could trade back down. You know, think about this wedge here. You know, gold could trade back down to the 200-day moving average. That's the 200-week moving average, but we could trade back down towards, you know, 1280, 1240. But it's probably realistic, you know, to believe that could happen. So anyway, just a lot of dollar bullishness right now, and tomorrow's going to be a big day. Tomorrow's the big day with the ECB meeting, and that's you know, I'm just again asking, are we going to see, you know, position liquidation ahead of the ECB meeting? The risks are tilting towards it could be, because a lot of times before a meeting, you know, you get a quiet market, but since positions are so skewed towards you know, dollar bears right now, you know, the market might be a little bit more nervous than normal, and you might see some of that position squaring ahead of the ECB meeting. So but anyway, so that's it. And I'm gonna be, you know, I don't want to talk about all the crosses with Steve coming on, and I hear you have a great guest today. You have Lydia, correct?
Yes, he does.
Sorry, Dale. Okay, I think he's muted. I think he muted himself. Yeah, good morning, Steve. How you doing?
Good morning, Blake. I'm good. How have you been?
Good. Just trying to figure out what I want to do with the dollar here. So, you know, the dollar looks
yeah, ahead of the ECB, we might see some pullback. It's likely, right?
Again,
the market, yeah.
the point I want to make here is that that the market is so bearish the dollar.
Oh, for sure.
It's so bearish the dollar that and it's so skewed the other direction. Does the risks of the ECB meeting right now push dollar bears, you know, push dollar bears out of their positions, you know, where they like, you know, they're like, listen, I don't want to be in these positions going into the ECB meeting with the dollar breaking higher and with yields breaking out. So I hear what you're saying, and usually, you know, ahead of an ECB meeting or a central bank meeting like this, it might be a little different, but I don't know. I'm thinking that we could see some dollar volatility in the next 24 hours. But anyway, I got to pass it over to you. We do have data coming out, so so I'll pass it over to you, Steve.
Good luck today, Blake.
Thank you, and thanks, Dale, and good luck today, and have a great interview with Lydia.
Thank you, buddy.
All right,
Hi,
see you guys.
Stevie. Hi, Stevie.
Hey, Dale. What's up, mate?
It's a Hindu holiday. The yen will go up and down, and then it could go down and up. Thanks on my commentary. So I know, you know, Steve, weren't you really impressed with how the yen held up with that big break in S&Ps yesterday? I think that was like one of the biggest features.
You know something? Yeah, initially it showed that it might reverse, but to be honest, it was quite obvious that the yen was not interested in responding.
Yeah.
In analogy to what we were seeing with risk. And let's be honest about one more thing. It was doing the same thing since a long time ago when we had the risk on. So the yen was not responding appropriately some time ago when the markets were like, cheering up and pushing to new highs every single day. And on the other hand, it wasn't appreciating the yen, not the USD yen. It wasn't appreciating yesterday when we were seeing stocks being under pressure. So
Yeah,
the yen.
Blake's got it right. It's responding to yields.
Exactly.
Completely.
So it's obvious. Yeah. And if we want to see that, we can simply overlay here. Let's overlay the 10-year yield.
And don't forget to talk about Barney Rubble today.
Sorry, what?
The Barney Rubble.
Actually, let's overlay it. To be honest, let's overlay it because yields are inverted. So instead of having to invert them, let's just simply overlay it with the US bonds, which is a much better idea because it's going to have, okay, straightforward government bonds. There we are. Oh, no, that's a yield again. What's the ticker? USB. Oh, yeah, it's USB. USB 10. There it is, the note. There it is. We have to go closer in time to see. You see, it was analogically correlated for some time, which made no sense. And now we're seeing this divergence. Now, if we go to the yield, because this is something I really wanted to show, and I wanted to show also why we have a movement in. Oh, let me delete this. First of all, I wanted to show both the weekly view for the bonds and for the treasuries and the yields, because we have been talking about this breakdown in the treasuries, so equivalently the break higher in the yields for some time now. We said that the rebound was very weak. We said that on a break below there, the next target would be the 161.8. But if you have a look at the weekly chart, you're also going to see that was a 50% fib support that we just broke through. So if I zoom out, you can see that this was the low that we had in 2007, and from the low to the highs, this was a 50% fib. We're now breaching below it, and the next area of support is, as I showed, the 119, because 119 is the 161.8% extension of the last correction. And the next target after that is the 118. Why? Because we had a low here, as you can see in the chart. There it is. We had a low here. So if we extend it, there it goes. So it's the 118. So it's 119, then it's 118. And as you see, we've already been trading to multi-year lows, and that says it all. Now, if we go to the yields, let's go to the yields on a daily chart. We were clearly showing this being a bull flag formation. We measured it. We said that it measures up to 3.36. So there's still a lot of room to the upside from here. We were also showing this some time ago as a potential inverted head and shoulders formation on the yield chart, right? So you can see it clearly here. It's a shoulder, it's a head, it's a shoulder. So we broke above it, we came down, we retested the broken trend neckline while building a bull flag, and we're now breaking above it. So this is clearly a major technical move that we're seeing here, right? There is already no question which side was the corrective move and which one was the impulsive. You can simply see here, this was an impulse, this was a correction, and another impulse is starting to the upside. So unless something big happens, I would really expect that even reaching the bull flag's target at 3.36 is really doable, right? I mean, it's more than obvious that the situation with the benchmark bonds have changed. So, having a look at the Bund as well, the Bund has been doing more or less the same thing. It built a bigger but still a bear flag here. It has now been breaking lower. If we go to the yields, there we go, the 10-year yields, you can see that they have been also appreciating since the middle of 2016. They're still very low in comparison. I mean, don't forget that at some point, you needed to pay the German government actually to hold their debt. The 10-year one was negative territory, but it has now been moving higher. It's at 0.63. There is still big divergence with the treasuries. And that's why we're seeing now, this is obviously one of the main reasons why we're seeing the Euro USD being under pressure. The Euro USD has now broken below this triangle, although we cannot be certain, and we've said that plenty of times, we cannot be certain that this is a triangle. I mean, we can be certain about the trendline resistance. We cannot be sure of exactly what kind of a formation this one has. And let me make it very clear here. We're not 100% sure that, something has really, something tectonic has happened and the situation with Euro USD has changed, right? I think that tomorrow's ECB decision is going to save that. Because if we do see some dovish rhetoric and the market actually accelerating lower, then we can be talking about having found some kind of a top. Until then, I mean, we are currently testing the 38.2 of the last move higher. So we've already spent, we found a high at 25th of January. We are now at the 25th of April, right? So we've been 3 months in a consolidation that has barely retraced 38.2 of the last bullish leg. So
what's interesting, Steve, is you almost had to have an opinion about it because we were all looking for maybe one more move, 26, 27, and what it reminds me of copper. Copper just distributed before it sold off, and it's the same type of thing. These are not easy tops to call.
No, it's not. They're not at all, because they look like continuation formations, right? I mean, they look like textbook continuation formations. And I have to be very, very clear here. I was also writing it yesterday in the chat room. The past couple of weeks, I'm very, very careful. I take very few positions because the situation is not very clear. It's obvious that we are seeing a dollar rebound. There is no question about it. But the question is the following. Have we invalidated any major levels that indicate that we found some medium-term, at least, low in the DXY and some medium-term high in the Euro USD? Not really, because even if we move a little bit lower and rebound from there, Euro USD is going to still look constructive. I mean, for me, a major level remains the 120.80 area, that high that we found there before this correction. We tested it as a resistance once again. I mean, I can't really turn, overly bearish until then, right?
I think
Obviously,
did Greg yesterday say, Steve, 119.80 or something like that would change his count?
I think he said 119.60. I think he said 119.60. Or something like that. Yeah, he might be looking. I'm guessing now that he might also be looking at this area. You see, we had a high here, a low there. That comes at around 119.40. The 200 DMA comes at exactly at 120 at the moment. We have the one.
Then it would be an overlap. Then it would be an overlap down there.
Yes. So I mean, in all honesty, ahead of the ECB tomorrow, I would still remain sidelined until I have more confirmation. The fact that we did break below the triangle, we came up, we retested it yesterday. We seem to be accelerating lower once again. We're currently testing the 38.2. All is nice. I mean, yeah, and the euro has the potential to extend lower from here. But I'm still not seeing the impulsive characteristics that would persuade me to be, okay, sure, this is it. We found a high. That's it. It's gonna now get people trapped that are long, etc., etc. Same thing with the DXY. we finally broke above the 91 area, and that's great because this is a level that has acted as resistance multiple times after we found support there. But first of all, we haven't even closed the day so far. Second of all, we have this descending trend line resistance, which is major. We also have the potential of this being a bear flag, in which case, if I extend it a little bit, you can see that even if you move a little bit higher, this formation remains somewhat valid, right? So, several areas of resistances, anywhere between, I would say, 91.50 and 92.50. Of course, you'll tell me 92.50 is quite higher from here, and yeah, you'll be absolutely right. But for me to be convinced that, something major, the 200 DMA as well, I mean, look for how long we've been trading below the 200 DMA, right? For me to be convinced that a bigger squeeze is coming, and if a bigger squeeze is coming, I think that 94.50 might not even be enough to contain it. I think that we actually have a good potential of pushing all the way up to the 96.50, this area. Because don't forget that, such a major bearish move like the one we've been seeing here, can easily produce, let's fib this. Now that there is some chance that we found a low, let's fib
Steve,
this.
The analysis is elite that you give every day, but you said something that maybe people overlook that is so valuable, even more valuable than getting the direction right. You said, when things are unclear, I trade less.
Yeah,
So
or
things are
almost none.
unclear, yeah, or not at all. And there are periods where it's like that. It's wisdom to know you're in a period like that, and it's okay to do nothing. So I mean,
absolutely.
that's the pearl. If things are unclear, do nothing.
Absolutely. And as you see here, I just fibbed from the high, the 23.6, just the 23.6 comes at 91.90 as well. So one more area of resistance. You see there is a cluster of resistances in this area, 91.50 to 92.50. Now, if we break above
Lost your audio.
there, then yes, I'm going to be convinced that something major is. Dale?
Got you now. But
Can you hear me now?
audio faded
Okay,
out.
good.
You're good now.
Okay, good. Good that you can hear me now. So if you see here on the weekly chart, it's also clear on the weekly chart here that this major trend line, which I made sure that I took into account all the weeks perfectly. I mean, I zoomed in to make sure of it, has not been violated yet, right? So this had the potential of being a triangle. Triangles very often break in the direction of the trend like this. That did not happen. We're now moving above, but there is still the potential, as I said, that this is, now you can see it on the weekly chart, this is a bear flag, right? So the potential of a bear flag has not been invalidated yet. This is a bear flag. So I still remain cautious. Having said that, though, I have to say that I've been looking, for a long time for some key levels. For example, I had said that if the Kiwi breaks below the 71.80 level, that's going to be a major break and it should see follow through. And that's what we're seeing now. I said that a move towards the 70 level, the 0.70 level, will likely happen. And I think, you can clearly see that there is huge selling pressure here. I mean, this is already 2, 4, 6. This is a 7th consecutive down day that we've had. And I think that we're going to get there one way or another. This is the Aussie. We said that 76.40 is a major level. If we break below that, the next area of support is 75. I think 75 is going to print. And then below 75, there is a pocket of thin air. Basically, below 75, the next area of resistance comes almost at 73. So, it's going to be another nail in the coffin of the Aussie if we actually break below 75. Needless to say that if you look at the big picture, the fact that we're breaking below this, which looks like a major, a long-term a bearish consolidation, a rebound in a bearish trend is a huge technical development. So, at least these commodity currencies don't look well for sure. Blake showed it before. I was closely monitoring at the USD NOK. USD NOK, when it finally broke above this triangle, it accelerated. I had said since the beginning that USD NOK had two potential interpretations. One of them was a triangle, in which case it could get rejected and move lower. The other one was of a channel, in which case a move towards the 61.8 area was very likely. And now you're going to see why. If I make this an intermittent line, if I extend a little bit this and now I clone it, you'll see that this channel comes at the 61.8 now, right? So now that we have finally broke above it and we're even breaching the 200 DMA, I have to tell you that my target is now 812 more or less, which is the confluence of the 61.8 and this channel's resistance. So I think a move towards 82 is very likely. I'm not going to show USD SEC because Blake already showed it twice. We indeed broke above a major level in USD SEC. USD CAD is a little bit more complicated, but I'm monitoring this channel. You can see it here, in which case a move towards the triple confluence of the 61.8 of the last move lower, which coincides more or less with the high that we found in March, and with this channel's resistance, all of that around 130, 130 is now a very likely scenario. We've been trading now above this this horizontal area of support resistance. It's the 50 DMA as well. So I think that any deep lower towards this area might find support for another move to the upside. So in general, the dollar index has not violated its bull bear line in essence. But I do see a lot of setups, especially in the commodity currencies, that point to a dollar strength continuation. So I'm taking that seriously into account, right? The fact that we've been breaking major levels. I said it on Monday. Monday was a day that we were concurrently testing major levels in many pairs at the same time, and they all broke. So I'm taking that seriously into account. Actually, I'm not short the dollar in any FX pair against anything. I'm actually, my only dollar position at the moment is being long the USD ruble. I'm long the USD ruble. My cost average is at 61.25. You all remember from last week I said why I like this dollar pair, because we went up to 65. I think that the move lower from 65 was clearly a central bank intervention. It came down, it retested a clearly defined area of support, and it now seems to be breaking higher. I'm viewing this as a pennant, so I would really feel comfortable about seeing this move extend towards at least the 38.2, which is at 67. So I'm happy to be staying long the USD ruble, and I'm looking to add even more simply because I think that central bank interventions get retraced. Second of all, it's one way to have exposure to being long the dollar. And third of all, if you remember, I'm looking for crude to top quite soon. I mean, I'm looking for crude to top perhaps at, if it hasn't topped already, which there is a chance, but still I don't consider it a high chance. I think that it should top towards 72 if we end up extending to that, which means that if we do see a high in crude and then it starts moving lower for a deeper correction, that is also definitely going to help USD ruble move to the upside, since we know the high correlation that the ruble has with crude. For obvious reasons, the economy has a big dependence on oil exports.
I think it's the one commodity that's held up very well with dollar strength.
Absolutely, and not the only one. There is one more commodity that has held very nice with dollar strength. Copper. Yes, look at it. It's still very, very close to the breakout area, and given the fact that, as you very well said, dollar undoubtedly has been showing strength during the past week roughly, copper doesn't seem to be affected to the downside. And not only that, we know that copper is also, in general, I mean, not on a day-to-day basis, but in general has a good correlation with risk. And although yesterday we had a risk-off day, quite strong risk-off day, yeah, still it also didn't get affected, right? So
good, good look, Steve. You know what I say? I say copper is about construction, and now look at gold. Gold is about destruction.
Yeah,
so
it's a good point.
Very interesting. So this is kind of a nice barometer for the economy, and I know you. I think they're going to flush the 1300 bulls. I've kind of felt that way for, the last few weeks. Thought I may have missed it when silver took off that one day, but they look negative. I don't think they turn till the dollar turns.
Something I feel, at least I feel vindicated that I'm very often when I need confirmation. Yeah, that I'm waiting for daily closes, because if in this occasion I didn't find it very important to get a confirmation for a daily close above 1355, I would have been really trapped. Yeah, I would have been really trapped being long on the completely wrong side of the market at the worst possible entry point, right?
Right.
But the fact that I was waiting for the daily close and we didn't ever get it kept me from participating here. But I have to say that still there is the potential that we'll find support and move to the upside towards 1405, right? We're still in this triangle. So gold hasn't really broken, I mean, from a technical perspective. And I know that a lot of people got disappointed from silver getting rejected. But on the other hand, if you zoom out, you'll see that nothing has changed for silver as well. I mean, silver has been in a long-term triangle. It's coiling. It's consolidating now. This triangle range has contracted to end between, let's say, roughly 16 and 17 and a half. So this triangle has just a 1.5, 1.6 dollars range. At some point, eventually, we're going to see a breakout, and I think that this breakout is going to have a huge follow-through, because when a market is coiling for so long, usually when you get a breakout, we should see volume, we should see momentum picking up, and I think that's going to be an interesting thing to trade, but not yet, right?
Yeah, it's got to clean out the stops under 1610.
Might be, but we're far away from that. Yeah, but we're far away from that because we're currently more or less back in the middle of this triangle, right?
Could be there in a day.
Oh, yeah. Oh, absolutely. Sometimes we've seen some brutal moves. Now, having to do with US dollar against other commodity currencies, or anyhow exotics in general, I have to tell you that I showed that on the chat room as well. We've also been seeing confirmation that something is happening here against other crosses, like, look at it against the Singaporean dollar. This has been a major trend. I mean, we have been trapped since this is one more of the seasonality things we have been talking about. We found a high in the first or second trading day of 2017. And since then, the US dollar against the Singaporean dollar has been trading within a descending triangle. And the day before yesterday, we probed above it. We came down yesterday, we retested it, and now we are pushing higher once again. We have an area of resistance coming at 133.45, but if we clear that as well, I mean, now we can easily fib that and say that, okay, let's see how much it can rebound. And you can see that even if it goes to the 38.2, there is a lot of move. A lot of road for it to cover, right? I mean, this is quite a large move. Now, same deal with the US dollar against the Chinese yuan. It was in a descending channel. It seems to be breaking above it. There is a major horizontal level of resistance at 638, but this has been a clearly defined move to the downside. And if we do see a rebound from here, we can easily at least push the 647 level. USD ZAR as well. Look at this. USD ZAR posted an inverted head and shoulders formation. I was also seeing as a potential pennant this as a potential pennant, but the moment we broke above, I remember a friend had asked a few days ago, and I told him that, listen, as long as this horizontal area of resistance is holding, you can still be viewing it as bearish and as a bearish pennant that will break to the downside. But we did violate this level, and once we did, you see that the market accelerated. It actually hit today this inverted head and shoulders formation target, and it has the potential of squeezing higher. It still remains bearish in the medium term, but in the short term, it definitely has the potential of rebounding even higher from here, right? It can even go all the way to 1313 before perhaps resuming to the downside. So we are seeing very nice and healthy rebounds, especially against commodity and exotic currencies. The cable, of course, has been one that has been
Lost you again, Steve.
moving as well. But as I said, those are very cautious. I want to see how the week closes, how the month closes as well, because I remind you that the month closes in essence in a few trading days from now, right? In 3-4 trading days from now, and reassess from there. I think that if this is a major dollar turn, if we have actually found a major low, there is going to be a lot of follow through that will be coming. So I'd rather miss the first part of the move, since I didn't have some kind of an indication to catch exactly, the low, and have confirmation and, catch the rest of it, then find myself like it could have happened with gold, for example, starting to get long the dollar just before it turns lower and proves to everybody that, yeah, this seems a little bit of a violent move, but it was still within a corrective move before one more push to the downside, right? So as I said, I would personally suggest that unless you're already positioned from the lows long the dollar, that you remain a little bit cautious. I know that there is an urge, FOMO, that when you're seeing big moves in the market and you're not participating, you feel like you're not doing something right, that you're missing out on something you shouldn't be missing out. But I don't think you should be listening to that kind of a little voice in your head. I think you'd rather be sure for what you're doing than jump the gun and get chopped up in the market. Let me see if we have time for a couple of questions, and then I know you have.
You do. Lydia's not here yet, so go ahead.
Okay, perfect. So we have plenty. What do you think of Andres long AU active pattern in the face of a strong? It can work, Brian. I mean, let me tell you something. The Aussie has a potential of finding a low here, for example, at 75. It's the last chance for the Aussie to find the low, actually, anywhere between here and 75. Because in my opinion, if it breaks below 0.75, probably you can kiss it goodnight. I mean, it will have already taken the road of no return. Now we have questions about yeah, that's a good point. Questions about the crosses. So crosses, Euro Aussie. You remember I was seeing this as a bull flag, and that we would break higher. This has already happened. Now to search for upside targets, I think that the only thing we need to do is move this extension to the last corrective move and see, okay, as you see, upside targets, the 127.2, 162.90, and the 161.8 at 164.30, those will be the upside targets for the Euro Aussie. Now the Euro Kiwi has been a relentless day, like the 9th day higher. Euro Kiwi, I was expecting that we would see some kind of a reaction from the 71.30 area. That hasn't happened. So there's a good chance that if we push a little bit higher from here, then whatever move to the downside we're going to be seeing is going to just be to retest the 171.20 area as support before pushing to the upside once again. It still needs to break the 174.80 target to to prove outright bullish, and it has definitely trapped people when we saw that break of this ascending channel, but it never violated, in essence, the trend, since we never saw a lower low, right? I mean, if you look at this chart, we're still obviously seeing here higher highs. There it is. Higher low, sorry. Low, 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 low. Momentum has stalled, so somebody in the short term could have thought this is a lower low from here. But if you see at major inflection points, we still posted a higher low here, and we violated the recent highs. So why not move down to retest this area and then push to the upside as well? Let me go through the pound crosses now. Before I do that, let me also have a fast view at the euro yen, because we have a question about the euro yen. In my opinion, the euro yen is one of the best looking pairs to break lower if you haven't caught a move to the downside that you were looking perhaps for some yen crosses. I still view this as a pennant. I mean, the move lower was clearly with much higher momentum than the move higher. This looks like a pennant to me. If we do see a break below here, I think there is a good chance that we're going to see another move towards the 129 area. So this is a pair I'm actively monitoring, and I might actually trade it. Depends on how it moves from here. Now let's go to the equivalent pound crosses. I think the pound Aussie was very clearly showing that this was a corrective move. I mean, this was a pennant. We broke above it. We seem to be breaking above it, but we didn't close above it a few days ago. We seem to be doing the same once again. If we do confirm on a daily close, I think that we should be pushing higher towards the 161.8 at 187.13. And pound Kiwi, here it is. Corrective move lower. It had the form of an expanding triangle. We never broke below this ascending trend line that defined the trend, this one that I'm going to extend here. And now we're pushing higher once again. Obviously, the next target is the high we found at 198.40. Above that, we can just extend this correction. Let's see where the 127.2 is. There it is at 2.017. So it still looks good to the upside, right? And let's have a look at the pound yen as well. For another friend that is asking, pound yen still stubbornly holding this channel. I think it also has the potential of breaking down, but it hasn't happened yet. If I do see a break below this channel, and we do gain some momentum, and especially if I see a daily close above this horizontal level at 150.80, let me mark it here. There it is. I think I might get interested in trying the short side once again. Kiwi yen, let's have a look at it. There was another question about it. We said on Friday with Greg
You may need
we
a new
explained why we
microphone.
liked that rejection.
You may need a new mic, Steve, because you faded several times. You know, we thought it was when you were on vacation, but it's happening now. Someone thinks you might have a short in your mic.
It's a very, very, very new headset. You know what I can do? I'll tell you what I'm gonna do. I'm gonna remove
my headset.
I'm gonna remove from the microphone. Okay, I'm gonna remove some ambient noise reduction I've added. Perhaps that's the problem.
Okay.
How is it now? Is it okay now? The volume?
Yeah, I'll let you know if you fade again. And very unusual for Lydia not to be here 4 minutes after we're supposed to start.
Oh, she's not here yet. Okay. We have more questions. It's okay.
Go ahead, buddy.
Yeah, I'm gonna go on.
Someone's asking if it was made in China.
No, actually, it's a $200 headset. So trust me, it's a good one. I did change some sound settings recently, though that might be the case. I just undid that, and let's see if that will actually fix the issue. Okay, so tell me if it happens again to see then if.
I will.
Okay, thank you. And I'm sure that it's going to be an issue perhaps of adjusting the gain because it's automatically being adjusted. Perhaps I can do something from there. Anyhow, NASDAQ. Okay, we have questions about the indices. So let's have a closer look at the indices. Okay, S&P pushed lower yesterday, but it still has the hurdle of this ascending trend line, the 200 EMA as well. Until then, I'm still viewing this as a triangle, right? If we do break below the 200 EMA and we close below it, I will then be looking for the two targets I've given since a long time ago. I said that if we confirm a daily close below the 200 EMA, I think that the targets we should be looking for are 2480 and 2400. Until then, I'm just viewing this as a triangle. Okay. Now, if you have a look at the Dow Jones, let's readjust. Let's put this trend line like this. In this case, I think we have a horizontal level that's more important. It's the 23,300. Let's have a look at the Nasdaq. The Nasdaq is in an ascending channel. Somebody can say that it even has the potential of posting here an ugly head and shoulders formation, but I think it's too soon to talk about that. You can see it here. I don't like it so much as a head and shoulders formation, I have to tell you. But okay, we can take that into account, but still, there is no incident unless we break below 6,300. So it's what I said the other day. We still don't have confirmation about what's happening with the indices. IWM is holding much better. Obviously, the Nikkei is doing very nicely since the yen has been weakening. The DAX has found resistance. I mentioned that the other day that DAX was testing resistance at the 50% FIB and the 200 EMA, got rejected from there. A nice move to the downside. Now, what remains to be seen is what kind of a form this move to the downside is going to have. So, is this move going to be corrective? Is it going to be impulsive? That's going to tell us a lot. If we see a move lower to come down and retest that area, and then in a corrective kind of fashion, then I will be looking for another push higher, at least towards the 61.8 at 12,900. Now, on the other hand, if we see some impulsive move beginning from here, I would be looking lower towards 11,450. Okay, but we still need more confirmation.
Lydia's here now, Steve. Can't hear you. Anyway, thank you, everyone. Thanks, Steve, for his great analysis. I don't know. Okay.
FTSE. Enjoy the interview. Okay.
Okay, bud. Thank you very much, Steve. Thank you. Hi, Lydia.
My pleasure.
I'm going to make you the presenter. Thank you for stepping up and coming in today, Lydia. Cable Queen. Waiting to hear your voice. Got the picture. See if I have to unmute you. There you go. Welcome, Lydia. Shows you unmuted.
Yes. Okay, great.
There you are. Hi, Lydia.
Hi, Dale. How are you?
Good. Thank you so much for stepping up and coming in. So let me get right to the bottom line, Lydia. Is this decline in the pound a correction in a bull market, or are we reverting back to the long-term downtrend?
I think it's a correction in the bull market. I really do. So I think that this is basically the chart. It's maybe my weekly will show it a little better. Yeah. So this is basically that. I think I like it on the daily. I just have a lot of lines here. So why I keep this? I kept this because this last thrust up into 143.78, I'm 68, was basically this hit on the 123 line, and then we just said boom, and we tanked. And really, this correction is still just this entire move, and it was a two wave kind of thrust or rally. We moved up to the upside, and then we had that nice correction. We moved back higher and made a new high. Barely, we hit the 123, and we're still just in a correction. So if I can clean some of these up.
So you mentioned that we've had two waves, two drives. Does that mean anticipating a third?
Yes. Yes, I think that we can get a third, and I think it's a little better seen on the weekly chart. So we had this move, and we had this correction. Now we're having this move. And now this drop, which I know it's been a deep correction. I've just done, we're still just really at the 318. I think we can move lower. I don't think that the correction is over. And I think that especially yesterday or today, even we've had that hold at $1.40 and we've turned lower. I think we can move lower still into the 50% line. As you all know, with me, 50% retracement in cable is very normal. And I think given the rally and given where we're headed, I do believe, and I think that we're headed towards 145. And I think that on this weekly chart, if you're looking at this break, that we're looking at a move that returns us to 150, and we know that that's not going to come in dry or rally straight up. So these kind of move really isn't abnormal for the pound to get these really deep corrections, shake everybody out who was long, have you thinking that the sentiment has reversed, and now move up and then go back and rally again. And also interesting thing with cable is the seasonality. We're heading into May, and again, seasonality is like correlations. They work until they don't, but pound strength is typical this time of year. So I still don't see a reason not to be long the pound. I would wait. I'm not trying to chase anything or get into the pound really until we can get below this week's lows here at 139.
So you'd be probing it at your 50% level, 38.40, or do you wait for it to react from 38.40 and do something positive to let you know you got something?
Yeah, no, I'll be probing it then. So I'll have an order set up ahead of that level, and with the stop, a tight stop, and wait to see what it does. Because with the pound, likely it's going to be a spike low. Spike low, it reacts, and then it's going to jump off. So I'm kind of like this here, kind of like we get at these bottoms. Like it's just a spike, it touches, and it reacts.
Okay. So with that constructive view on the pound, I find it interesting. I know last time we talked, we were looking for, and you were, and many FX participants were looking for a major breakdown in euro pound, and we got one.
Yeah.
With no follow through.
Yeah. So this is my weekly view, and yeah, we got that breakdown right into this support level. So folks shouldn't give up too much on the euro pound. This is a natural reaction off of major support level, 86.50. So I think this is pretty expected. This is a huge time. This is a big time level. So to correct this entire thing and then come into the 38.2, I thought we might head higher. Like maybe we would see, the market flush out longs above 88. But we moved right into 88. And held it, and now we're turning over. See, like now we're below the 87.50 level.
Okay.
That's a great reaction.
That's to me, just keeping an open mind. If you look to the left of the low, that spike that we had, and we're failing kind of like at a neckline up there, a little under 88, that we could pull back maybe 61.8 of this recent bounce and put in a right shoulder.
Ah, okay, I see what you're saying. So it drops here and back into 87 or even below 86, and then reacts again back towards 88.
And then next time over 88, maybe it has could challenge the 89 level or 90.
You know, if we get, yeah, you know, that's something I would keep an eye on. I would definitely keep an eye on what happens at 87 and below 87, and if we get that kind of reaction, I would wait for the 50% line.
All right. So the yen has really taken the market by surprise. So I'm also curious on what you're thinking here with Guppy, and you would think that the yen would be a pretty good assist for this pair on the upside. Are you, if you're bullish of pound and the yen's acting okay, I'm assuming you're probably looking to buy pullbacks in Guppy and you like it.
Yes, so you know, I'm one of those who was surprised by the yen. And it's quite bullish here above 152. That's where I last tried to catch it short. It was at a 61.8 line. 61.8 line of this move to the downside. So we broke above there. I had to take a loss on that, and so I've been watching this pullback to see what it does. And so what I'm waiting for, because I admittedly am not super convinced that the yen is weak, and I think that comes with my bias towards equity. So it's hard for me to get short on the yen. And what I'm looking for is to see if this, and so far so good, this is very constructive, but I'm waiting to see if this high fails. And if we get a failed high here, we will move lower. We will likely move below 150. And then it remains to be seen if we hold support inside these fibs or above 148, ultimately above 148. But I think that if we don't get this move above 154, that we're headed back towards 150. And if we break and hold below 150, particularly going into Friday, I think that we're headed back towards 148. The charts are
in equities, Lydia.
I'm sorry?
It influences you, your bias in equities, because you said it influences you.
It does give me a bias. You know, I try to trade every chart unto itself, but I can't help but keep a mind to weak S&P and wondering why the yen is so weak as well. So I'm thinking you have to prove yourself. And, you know, if we don't get this move to the downside is a nice correction, particularly on the weekly, and we basically failed. You know, we should have gotten above 156. So we failed. To me, that's like the first sign. We dropped, but then we held, you know, above the fib. And so right now I'm looking to see what kind of failure we get. If we get failure now, as the pound yen is attempting to move out of this current fib, so it needs to break above 154. And now it's looking weak. You know, we have momentum is not carrying us through. I think we can see a failure, and we're going to see a move. I think we'll see a move back to 148 and below. I do think that this drop to the downside was the beginning of something, but again, clearly the pound strength took over, smashed us through the 61.8 line, took us towards, and should have taken us towards this resistance. So just look at the weekly. This is what I'm talking about, you know, kind of right at just below the 50. And so this is a failed high. If this fails ultimately, and this is that 153.85 high, if this fails ultimately we're moving back towards 144, right? So that's why I don't believe this yen weakness. I don't believe yen weakness. I think that this is a shakeout, and I think that we can get a significant move back to the downside. But
what would be levels that you would you short it on weakness proving itself to the downside, or do you have a level on the upside where you would probe a short?
Short the week. I like it here above 152 for a short. I think, you know, the high 152.60. Yesterday's high, I think that's a nice stop. This is a 40 pip stop. So, you know, if it's too wide for you, you want to kind of wait to see if this Wait today, and you can see today if we kind of move to the upside, if we move back into 152.60 and take that high out, then you want to wait and see what happens around 153, 154. But I mean, I like it here. Personally, I like this here. Again, I really think that the yen strengthens. I think the yen strengthens. And then, we had the Bank of Japan, and we've had that kind of, rhetoric. Yen always weakens into and after the BOJ. I mean, they haven't changed their stance in many years. They're always going to be dovish. Market still reacts to that. I don't know why. It's not a surprise. So I think the yen has to prove itself weak. Particularly against the pound yen, it needs to get itself above 154 to win that case.
All right, definite conviction there about the yen, that this is a bear market rally, therefore opportunities in the pound yen are looking to sell rallies. So what about with all the weakness that we've also had in commodity currencies, and a lot of commodities under pressure as of late, and Aussie almost looks like a major weekly or monthly breakdown here. So you're probably looking to buy breaks in this as well.
Yeah, this one definitely needs to break if you're looking to buy the Aussie. This one needs to break. So this one's been in a consolidation for several weeks now. So let me just come out to the daily. Yeah, so this one has been in consolidation really since the end of March. We touched on 182 and between 185 or 184.50. So this one to me is in a range, and when we saw with the euro pound, you want to wait not only until it breaks the top of the range if you're bearish on the Aussie, not only until it breaks the top of the range, but you'd like to get in then on a retest. So let it break above 185, come back and fall back into 185 or even 184.50, which would be more likely, and then take that long. So right here isn't interesting quite yet, unless you got in off the bottom of the range, right? You should be taking your profits at this point. But for those of us who aren't in this trade, there's nothing to trade here yet until we get a break, or you can even see how people might even be positioning on this one short, just because we're in a range, right? And you play the range until it breaks. So a short up here too makes sense. And that would fall in line with another move of weakness in the pound in general.
Okay. All right. What a great wrap. And really a pearl. In a range, you do nothing unless you're trading the range, and then wait for the range to be broken to the upside or downside, and don't go with that initially, but wait for the retest of previous support or previous resistance.
Yeah, bingo. Yeah, and the lovely thing about the pound is that it tends to always do that. never chase the break, not with pound.
Okay, so I think we've covered the gamut in everything cable, have we?
Yeah, I'd say so.
All right, so why don't you take some time to tell people what you do, Lydia, and how they could reach you.
Thanks so much, Dale, for having me. I love coming in and talking because we can talk technicals, and that's that's our lane versus the fundamentals, solely fundamentals. So I'm a trader, as you all know, Forex trader, also a registered investment advisor. You can catch me on Twitter at FaithMight, and I'm
a must follow. A must follow.
A must follow from Dale's mouth, not mine. Yeah, give me a follow on at FaithMight on Twitter. My blog I don't have up yet is faithmightfx.com, and I put a lot of the charts up. It's more of a technical blog. I'm trying to make it a little bit more. So it's great for us traders, I think, my blog and the charts that I post. And you can check out my company at FM Capital GRP, which is FM Capital Group, which we do the asset management and other financial solutions. And I also coach. So off the blog, I'm also coaching. I think the blog is the best place to go. But off the blog, you can find where I'm here, learn with Lydia. I'm also do some coach and mentoring for students who are looking to get better at their trading in particular. And we do go with the Forex market and obviously with pound, but that knowledge can be extrapolated into other markets and into other asset class and other charts. And then Invest with Lydia, you can find more about the RIA and other management services that we provide.
What's your minimum account for your RIA, Lydia?
Great question, Dale. So we have no account minimums, but we really are trying to provide services to anyone who needs them, and that's everyone. We all need some sort of asset management, I believe. So even traders, because traders are constantly looking at the markets that they're trading, and then you need it is wise to have someone else on your team looking at everything else.
Let me ask you this. Do people have to transfer their account to a particular broker for you to be their RIA?
Ooh, good question again. No. So we are independent, and so that allows us to work with the brokers and the accounts that clients come to us with. So there's no unnecessary transferring. We're only doing transfers when it makes the most sense. Usually investment options are poor within the current account or something along those lines, but not just to work with me, no.
Okay.
And I'm very deliberate about that. We're independent.
That's a lot of great flexibility. Check out Tastyworks.
Yeah.
And Lydia, so that means that's really flexible. Most RIAs have minimums.
Yes.
A lot of RIAs, you have to transfer your account to the broker dealer they have their RIA hung with.
Right.
So a lot of flexibility. I would feel comfortable getting Lydia's input with my retirement funds. So thank you very much for being here today and clarifying cable. The big question was, this is just a pause in an ongoing bull market in cable. So instead of worrying about dollar strength, consider it setting up a great opportunity should Lydia's scenario play out. Thank you, Lydia.
Thanks, Dale. Thank you all.
All right, my trading warrior sister, Lydia Idem Finkley at Faith Might, and it's a great handle because I have faith in her. So everyone, that's our wrap for today. Good hunting the rest of the day. Thank you for your attention, and we'll see everyone for investing.com Thursday tomorrow. And most of all, don't just count your pips, my friends. Count your blessings. Thanks again, Lydia. See everyone tomorrow. Adios.